The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Okay, folks, Larry Pesavento for Steve Rhodes. I wanted to bring everybody up to date. You know, we were short this is the Russell at 2107 here on Sunday night when we had the 382 retracement. We risked 10 points right here. Now, at this point, we had a huge profit, but that was during the time we were not on the air, so we're still in the position with our stop here. We believe that we've made some type of a pretty substantial top here in the Russell, and as you can see here, it's been going sideways for 1, 2, 3, 4, 5, 6, 7, 8 days. So I don't know when it's going to roll over, and even if it's going to, but it has the probability of potentially doing that today. Now, I say that because I look at a few different timing mechanisms, and if we take a look here at the S&P 500, what it's doing so far today, you see it has a bearish bias. And that's because we've had lower tops in here, and we didn't take out the top way back here at 59.97, I believe was the high, and we come down about 30 handles, and we had a little ABCD here, but it does have a bearish bias. I'll be doing my show during this time, and we should be bottoming around that time. That'll be around 1:30, 2 o'clock today. So we're going to find out if that's the case. Now, we also happen to have a position on in the wheat market that's done very well. We'll get this up here, and hopefully we'll be able to see it. There's our December wheat, and we'll get this up here. Folks, we've now have a big profit in this wheat. Let's just get the daily up. We've reached the first profit objective. Okay, there's we bought it down here at 48. We're now at 78. That's made $1,500 in 1, 2, 3, 4, 5, 6 days. So we have a 6-day rally at 1, 2, 3, 4, 5, 6 days. The last time we had a 6-day rally, 1, 2, 3, 4, 5, 6-day rally right here. If we take the high off of that, that brings your 61% retracement right to there. So, folks, the risk-reward now is flipped. So you have more risk than rewards. So we're going to take profits here in the wheat, and we'll look to buy it back. Now, we maybe never get it bought. Maybe it'll just explode to the upside, but it's not how much money you make, folks. It's how much money you don't lose, and we don't want to lose anything. You're up $1,500. You're risking $500. Now you're up $1,500. That makes this a really good probability of a trade that might work. And again, it might not. So this is what it's all about. So that's what we're watching here in the December wheat. Now, one of Steve's folks, of course, I've known Steve for a very, very long time, asked us to take a look at the Japanese yen dollar that we've been watching for quite a while. And he happens to be, you can see yesterday, a few days ago, we had the beautiful 382. Now we're down 1, 2, 3, 4, 5. We're down 7 days now. Let's see, 1, 2, 3, 4, 5, 6, 7 days down. All right, now if we look at this really closely, it looks like we're getting a little bit of a 135 pattern in here. Now, this market has made some type of a pretty good turn from this level. We've had a really nice rally. Now it's pulling back. It's holding this level so far. So the first thing I would do is look from your low to your high, and you'll see that comes in right there at the 50% level. Okay, that means that this one is going to be just about the 618, and we'll pull that over here right now. And there it is. Well, it's almost at the 786. So there's your key level here to look at here in the end. So if you're still short this, I would lower my stop to today's high. That would be at 145. It'd have to rally up about 40 pips to take you out, but that's had a really nice move. You want to protect profits here, folks. So that's the whole key of what you're trying to do here. So we're to remember, when markets break like this, look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9. This went 10 days. Okay, this one went 1, 2, 3, 4, 5, 6 days. There's probabilities related to all of these moves, folks. This work was done by Larry Williams 50 years ago. I remember buying it when I was at Drexel bought it, but he did all the statistics and all the commodities, and the odds of a market that goes up 3 days in a row of reversing is better than 60%. On the fourth day, it's a little higher. Fifth day, a little higher. Sixth, seventh, all the way out to the eighth day, it's about 85% that the market will retrace after the eighth day. But after the eighth day, it becomes an outlier event, and you can go any place. So that's why you've got to be watching it. So what we try to do is we match up the price with the time. How many days does it come down? Where is it stopping to? That's all we're trying to do when we're using ABCDs and putting this stuff together like this. I'm going to be going over this stuff a lot on Friday because there's some things that I'm going to be showing you that I used to use when I was, little shaver back there 50, 60 years ago when I first started trading. And I did my first trade in, it was January of 1959, folks. I bought a little stock. My grandfather bought me a stock. He bought me 200 shares of a stock called Elastic Stop Nut. And basically what it did, it made plastic fittings on nuts and bolts. Those little things you put at the end. They moved from steel to plastic. And boy, that thing took off and it doubled in price. And I was able to buy my first car as I was getting ready to go in, as I was in college, and I had a 49 Mercury convertible that I bought from one of our neighbors for $300, and it was in great shape, and I kept that car for about 3 years and sold it for more than I bought it. Anyway, that's what we're looking at here with the Japanese yen. All right, now we've got another one here that looks real interesting here. Hold on one second. I want to get this up here. And that is the gold market, because this has really done what we thought it was going to do, folks. You remember we had that big ABCD bottom down here. Let's do the daily first so we can all see it together. That told us we were ready to have a really good rally, okay? Now, there was a 382 for the last 3 days. Now, I want to show you this because I think it's pretty important. As we look at this here this morning, you can see right here this morning, we matched it again. We went exactly to this level right here. Early in the morning, we matched it. And it just went to the exact same high right here. Didn't even take it out. But look what happened after that, folks. After the market came, it dropped, believe it or not, $25 straight down, taking out the low of the day from the overnight session by less than $1, stopping exactly at the 382. And folks, look at this. Look what happened when the breakout occurred. See, that's when you get those, when it tests like this and breaks above it, that's when you can buy a breakout. Like you could even buy this breakout, but this one doesn't follow through. This one followed through. So that's what you're expecting to see, is that you're expecting to see it follow through if it's going to be doing that. And that's the key to what we're watching here today. Okay, so that's it. I just wanted to give you a heads up on the gold. And there's another one that looks real interesting today, folks. It's really moving a lot. I have a friend that's in the platinum business, and he called to alert to show me what's happening to platinum. And if you look on the daily here, it's acting really strong. So if you remember, I've been talking about silver, that silver didn't look very bearish at all. And let's see if we're above that 34. Oh, we're getting really close, folks. Here's silver for today. There's today's low. Look at this 135 pattern, folks. This is just a perfect 135. 135. Check the ratios, and you'll see where you are. This one went right to exactly the 682, and this one here came down a little bit more. And there it was right there. There was your level right there. And it's rallied 80 cents, so big move. We'll take a break here, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, folks, Larry Pesavento for Steve Rhodes. This is the Treasury bonds. We had the big move down here. Then we rallied 2 handles. And where did it stop today, folks? If you like these numbers, there's your exact 786 right there, right on the money. And then it's rolled down and it come back down. And we'll see, looks like on the way back down, it's going to be pretty close to well, it's a little below the 618, that's for sure. Yeah, it went below the 618. Now we're rallying back. Let's just look at it on a short-term basis now. As you can see here, this is, remember, now it's taken a little more than an hour and a half to make this rally. Now, this is for an intraday trade. If you're looking at this and you believe that the bond market is weak, check to see if this is a 382. Now, I'll put this up here and we'll mark it here, and there it is. Right there, we're sitting here right now. So we've rallied. There's the harmonic number right there in Treasury bonds. So that, on a day trade basis, you're below the opening price, okay? And you're sitting right at the 382. This is the kind of thing we're going to be covering on Friday, but you're sitting right there right now. So if you sold it there at 112.20, okay, you got to put your stop above the 618 because 382s work, but when they get above here, that means they're not working. So you're risking $300 on this, okay, and your profit objective would be the ABCD on this, which would bring you all the way down here, which would be more than a 3-to-1 risk-reward payout. So we're looking at the opening price. Now, when I did the opening price book 50 years ago with my good friend who since passed away, John Hill, that book had been rewritten several times back in the 50s by Earl Hannity and Jim Sibbett. These guys ran a commodity called Market Trends back in Los Angeles area for quite a while, and they talked about the importance of commodities with opening prices, and it worked really well. Toby Crable wrote a book about it, and Toby Crable was working with John Hill's son, John Jr. at Duke. They had all the computers. We had the data from the CME because I was a member, and we did is we tested to see how it worked. Now, the problem is when we started in the 1997-98, if you remember, the SOS Bandits came out and got the NASDAQ to go from a quarter-half on the NASDAQ stocks to decimals. And boy, that just changed everything. Because now the opening price, they were open, overnight and everything like that. So that changed, the inflection of the opening price. In other words, the opening price has to be at the exact opening of the New York Stock Exchange or the NASDAQ. But remember, they're trading over the night, so that opening is different. So what you want to do is use the opening of when it actually started. And that would be like 4 o'clock, 4 o'clock in the afternoon for stocks, and that would be at midnight for the overnight session. But this is what you're looking for. In direction of the opening price, you got a 382. You know what your risk is, and it's not how much money you make. It's how money you don't risk, and that's why you're using it. I'm going to cover all that stuff on Friday. We'll go over some of these things that I'm looking at. One of the questions that I get quite a bit, and I'll just show you. Let's just go back and look at something that I think is getting ready to happen. And now I think we're getting ready to see a huge bull market in grains, especially in soybeans. So we're going to get up here and together, and I know if Steve was on, he would like to chime in on this too. This is the November soybean market. Okay, this is what we're watching. Okay, now you can see we had a big run up to up here at 66, and now we backed off about 40 cents. That's exactly what we wanted to see. Now look what we've done today, folks. I have just put this up because I just did this one just like I did the other one. There's your 8. We're in a downtrend, no question about it. What did you do? You make your first ABCD correction right there at your 382. That's all it did. It went up, hit it exactly 43. It's got 6 cents profit in it. If you'd have done this trade, you got your stop a penny away, so you're risking $50, which is basically break even. But now you've got a $6 profit in it. But that's your ABCD right there, okay? And the opening price. Remember now, this is the 19th, correct? Or this is the 20th. Okay, so when you're selling it right here, you're selling it above the opening price. All right, but that's basically right at the opening of the market. And so what it does is it rallies right to that level. This is pre-market, and then when it opens right here, that's it, right at your open. So you're expecting it took out the previous high. Okay, and all it did is made a perfect 382. Now they don't work all the time, but remember, nothing works all the time. It's not how much money you make, it's how much money you don't lose. So let's look at this on a little bit longer time frame. We're going to go to the daily now, and you can see here we've had a nice run. Now you see that line that I have right across here? When we cross this line, you do not want to be short November soybeans. And the reason for that is it's going to be breaking out of monthly highs, all right? And it's in the time frame of the most positive seasonal you can get in grains. That's the time between May and August. This is the growing season, okay? So that's what we're paying attention to as we're looking at this thing unfold here. Let's move on here and take a quick look at some of these other things we're looking at. Hold on one second. I have to check out something here, and then we'll see where we are. Okay. All right, there's where we are. We just made the 382 now in the natural gas right here. You can see we just in fact, we're above it a little bit, so you don't want to do that one. But that was the area where we're running into it, where we should have some pretty good resistance. But there again, you can see this still going higher, and we should go higher at least into right here, and then you'd have a spot to take a look at it, okay? So that's what we're paying attention to right here. And we'll move on to get out some of these other things that we're looking at too. We've already covered the Russell. We have to talk about crude oil here. Yesterday we had a really interesting trade. You remember? Let's get that hourly chart because that's what we did it on. There it was right there. Had a really nice profit. Came down in here. And today what we do? We went right up to the same level again here today. There's today's action. We went didn't even take out the previous high, just went right up there. And now we've had lower tops coming in here, so that tells us we're getting ready to probably back off. This is strong resistance now because you've hit it 2 days in a row, and that means you're going lower. As you can see here, you're starting to move down, and that's what you're looking at in the crude oil. Now, I haven't checked my AI program on this, but I'm going to do it right now. I'm sure Steve won't mind, but there's what we're watching here in the crude. Now, this is not what we call a very good fit, but we are moving slightly lower in here, but that's what we're paying attention to here right now. So let's keep that in mind where we have right there, and then we'll find out what we're doing at that point. Okay, now we'll get this out of the way to make sure we have everything else lined up. And I covered the Japanese yen, the euro. We want to come up here. Now remember, folks, we exited the long wheat here at 579. We bought it at 548. We sold it at 579, mainly because of the 6 days up and almost exactly at the 382. That's what we're looking at right now. And the second thing, that we've got a break coming up here pretty good. We're going to be looking at a low here in stocks here when my program comes on between 1 and 2. So there's where you want to be watching, and that we should be making new lows at that particular time. Okay, so let's check and see what the old clock on the wall says and see if I got the timing right on anything here. And we got 35 seconds left. That means we got time for looking at Apple, and we'll get up really quickly and put Apple up, and then we'll take a quick look at that, and we'll be right back. So hold on.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Okay, folks, Larry Pesavento for Steve Rhodes. I talked about this earlier, folks. This is a 382 retracement in a bear market, so I had to be a seller here at 338. Stop, you got to put your stop above here. So you're going to risk about $600, but that is a 382 retracement off the high that we made way back here 10 days ago. So that's still a bear market, and it's having a bear market rally, in my opinion. And of course, like most things, sometimes they work, sometimes they don't. All right, let's move on here to the next one, and I want to talk to you a little bit more about Apple. Get Apple up here, so we'll take a look. Folks, Apple doesn't look very good. Now, we've had a pretty good rally here. We're down today. You can see we're down a little bit from where we were. There was our low we made the other day. We look at this on a daily chart. It doesn't had a pretty good rally, but boy, it stopped, broke above the line here. Look where we're stopped, exact 50%, and now we're backing off. That's the way it looks to me about Apple. Now, I've had some other questions from other people that have had interesting charts to look at today. And another one we want to look at was Amazon. And this is going to get Amazon has been strong here off the bottom. Let's put the daily up so we can see where we were. There was a big move down, and now we're having look at this bad data. Shut the front door. Let me try to refresh this. It probably won't work, but nah. Well, yeah, it did work. There it is. Okay, now we made the 61% retracement here on the 13th. Okay, now we backed off, and we're basically, it looks like we're up just a little bit here in Amazon today. So I don't have anything to say except that I still think that we're looking lower. The only reason I still have a bearish bias, folks, is because of the outlier event. With the stocks being up 17 out of 20 days, that only happens 2 or 3 times a year, and usually it tops. I've gone through that sequence of events of where we are with the S&P. In fact, that's what we should do right now, is check the S&P cash to see if they've made much of a higher high than the previous day. So we're going to bring this up on the daily, and you'll see what I mean here, because golly, CKG is dropping a bit on this one. Just a minute. Let me try to refresh this again, and maybe it'll correct itself. Yep, it did. So we've came up here now, and you can see we have gone above the 78% level, and it's hanging there. There's where we were last week here. Look at this, folks. Every day, look at that. We're just hovering at this same level all the time. This is usually an indication that, the market's getting ready to be tired, just like it was up in here. This is an outlier event, folks. You don't see moves like this. Not this many days. Look, you're only at 1, 2, 3 days out of 21. That's hardly, even on the way down, you see you have up days. So that's a very unusual event. It's called an outlier event. And when those happens, that's when it tells you you're usually getting ready to see if that thing's going to be a mover or not. That's really what you're watching. Okay, now that's the S&P. Let's take a look at the NASDAQ. I don't trade this, but I follow it because the whole world follows it because of NASDAQ stocks and everything. And here's our NASDAQ is right here. And we're going to bring the daily up on that and see how much of a higher. There's again, look all we did today, folks, in the NASDAQ. Even with all the bullishness, let's just see if it was able to take out the high. Yes, it did. The high yesterday was 21,544, and the high today was 21,562. So it took it out by 20 points, and now you see where we are right now. Look, see all this stuff up here? This is either accumulation or distribution. And I think it's distribution. So that's where we are. We look at this on a shorter term basis for today. Let's see what happened after the high was made. Okay, the high was made right here. All right, there's your high. Oh, no, that's not true, Larry. It's way back here. There's your high right back here yesterday. All right, now I have a bad data problem, folks, because, all right, let me show you what happened here. All right, let's look at the daily. Okay, now you notice how the daily says we're up here like this, and this says we're right here like that? That cannot be right, because if you put the smaller time frame on, there it is. All right, now I understand. There was the high yesterday, okay? There was the high today. All right, and we took that high out. You see that? By just a heartbeat. And now we're starting to come down. And if you just take the premise to sell the first 382 retracement on a market like that, you would have been short right here, and you'd still be short, and your stop would be above here. Now we've had a break, and then we had another rally. Let's just double check and see, because these things repeat over and over again. As we move it over like this, there's your high for the day. Well, actually last night. And then as you, oh dear, just a second, let me draw this in so everybody can see it. And there we did it again, right up to the 382. Your stop would have to be above the 618. So that's what we're watching here as we watch this thing unfold here today with the NASDAQ and the S&P. Okay? All right, we'll move this out of the way. And we'll get this SPY out of the way. And we have to look at a couple of trades that we were doing for our show, which one was Goldman Sachs. Now, I don't trade it, but I'm certainly going to look at it because we had a sell signal at 616 in Goldman Sachs, and we want to see what it's doing right now. All right? See if it's still working. I haven't seen the beeper go off. Put the daily up here because that's what we were watching it on. And we'll see where we are. And we're still in it, and it's acting pretty good. This was a perfect, shut the front door. This Amazon out of the way. There's the old Goldman Sachs, all right? There's a beautiful pattern right here. The sell was at 16, okay? The stop was at 23. It only got to 20. Now it's at 07. So now you've got basically a 10-point profit, so you could put your stop at break even on that, but that's a perfect head and shoulders. Left shoulder, same as the right shoulder. Time between the shoulder and the head and the shoulder and the head is equal. That makes it mathematically correct by Andrew Lowe's book, The Non-Random Walk Down Wall Street, and that's the way it's looking. There's a better one than that, folks. Let me show you the long-term. This is the same pattern, only it's in Google, and we'll get this up here right now. But it's on a weekly, and that's for long-term traders. But let's see if this is still holding up. And it is. All right, here's Google. All right, now there it is right now. There's your left shoulder. There's your head. There's your right shoulder. You see how everything lines up? Your high so far last week came in at 169. Well, we're only trading at 167, so it certainly hasn't backed off very much. But it hasn't taken that out. So until it gets above 170, you'd still be short. And, it's done nothing today. You can see it's just a little very, very quiet range. But this is a perfect symmetrical head and shoulders sell signal. If that's the case, Google should start to go lower. And some of these stocks have some really strong bearish implications. All right, so we get that one out of the way here, put that out of the way, get Goldman Sachs. Now we want to take a look at Tesla. I actually like looking at stocks, folks. I don't trade them because they don't have the leverage that you get, and they're just not as liquid as some of these commodities. Let's take a look at Tesla here, and we'll be right back, okay? Stay with us.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, Larry Pesavento for Steve Rhodes. We're looking at Tesla here, folks. This is a perfect ABCD. It measures to 351.17. The high today was 354. We're now trading at 346, so it's completed it. Now let's look at it from an ABCD standpoint. There's your low, 1, 2, 3, 4, 5 days up. 1, 2, 3, 4, 5, 6 days up. 7 days up, 8 days up, 9 days up. So that should be it right there. At 351. Of course, you hit it before, came back, hit it again. So this is showing you that there's something pretty significantly strong resistance up here in Tesla at this 351 level. All right. Now, if you remember yesterday when the Dow Jones was going crazy, we were watching United Healthcare. And this used to be the most expensive stock in the Dow. Oh, this thing is just a... it's a weekly. Just a second. Let's get the daily up. Okay, there's the rally that we had yesterday. It looks like it's rallying again. Let's just double check here. Refresh again today. Yeah, we're having a little bit of a rally now. We're up 1, 2, 3 days in this rally. We've gone from we rallied $60. That's a lot. This used to be the most expensive stock, from $620, folks, to $240. And you'd think the Dow Jones would have collapsed. And it didn't. It went up because other stocks were pulling it up. So it's acting relatively well. Now, this is just a little dead cat bounce. That's all that really is. I don't think this stock is going to go anywhere. Just looking at this on the 382 retracement of this, that would take you up here to, that'd be up 160 points from that level. That would be, no. It'd be up 60 points to that level right there, would equal to what this would be. So that would be your 382 on United Healthcare. If we get to that, okay? So that's what we're paying attention to with these. Let me get this out of the way here. And I want to get back to soybean meal because I want to be able to cover December soybean meal because that's got a really good pattern as far as what I want to see. Hold on one second here. Just a minute. Doggone it. Little frog in my throat. All right, let's get back here now. We've got, remember, we're coming into my show here in about an hour and a half, and we'll be looking for a bottom coming in here in this S&P. So we want to be looking for a buying opportunity. We get in there because we should have a pretty good rally after that, and then down. This has a bias today, though. You see the rally here, and this is the last part of the day. It's not as accurate, but so far we should be bottoming down into that area. All right, so let's move that out of the way and take a look at it, and we'll see where we are here with some of the other things. Let's get back to that December soybean meal. I think this, folks, the soybean meal is pure protein, and believe me, that is really valuable. That's like the DNA of these things. So let's get the December soybean meal up, and that would be right here. I've had it up here before, but we're going to look at it again. Okay, here's where we are. Look how many times we've been down here now, folks. We're down at this level right here. Look how many days we've been at this level right here. This is either distribution or it's accumulation. And I'm believing that it's going to be accumulation because you've had some higher highs in here and you've had some higher lows in here. All I'm waiting to see, as you can see, we've been coming down really hard. There's one more chance, and I hate to use the word hope, but there's your larger ABCD pattern here in the meal. Okay, now this would be ideal because what this would do would clean out all the stops from the last month or so. So since there's, June 7th or April 7th was the bottom of the world, but that was it. That means we take out that. So around 295, we can get meal down, decent meal down about this level here, around 295. There it is right there. And put that in here right now. I'm going to be a buyer. Just like I bought wheat, 295. I'm going to buy it right there. And I'm going to put a stop at 285. That means I'm going to become a farmer. It's going to be $1,000 risk. But this is a big move, folks. And if we look at this on the long-term weekly, and we're in the growing season, so all it takes is a little bit. There's, that's where I think we might get there. That's what I'd like to see, that one more drive down. That's what I'm waiting for to see, to see if we can get that. And that's the number that I'm watching at 295. So that's what I'd be watching. All right. So keep a close eye. We're still here. How many weeks we've been here now? 8 weeks. We haven't gone very far. Here you lasted about 8 weeks, and you had a pretty good rally. But boy, folks, this is not unusual because if you look at the weekly price of this stuff, this used to be at 400 easy, sometimes 500. So you could almost double in price, and that double in price is $20,000. You're only going to be risking $1,000. That's a 20 handle. That's a heck of a deal. So let's remind ourselves of that. All right. Okay. Now we got the soybean meal covered, and I have to cover December soybean oil too because it's still acting really bullish, folks. You can see here we're waiting for a 382 retracement here in the oil. We've had the big move up. You can see all that ABCD, we did that 3 drive to a bottom pattern. We had the order sitting here. It opened sharply lower. We missed the whole thing. Nothing you could do about that because the market was closed. Did that on the hourly basis. You see, there's where it gapped down. Our order was right here. It gapped down and bang, it came down really hard. And all we've done yesterday and today, yesterday, looks like we made a 382 retracement. And we did. And there it is right now. And now I've been asked by one of the listeners to take a look at the cattle market because haven't looked at that today. But it's August cattle. We'll get this up here, put up a half-hour chart and see if we're getting a little bit of a rally here. We'd like to see a rally to the 382. We had the big move down. Let's see where we are so far today. Move it up here. There's our high. Here's today's action right here. Let's see if it made a 382 this morning. Oh, looks like we missed it by a hair. Keep that working though, folks. See, it misses it by about 20 cents or about $100. But I still think we're going to get a 382 retracement in here in cattle. You'd like to see it with an ABCD pattern. Then you've got something moving in your favor. So that's another one that we're watching really closely. Okay, that'll be a nice setup for probably a trade on Friday. And we could get a counter trend rally in this with a nice ABCD. This is what you don't know. Okay, we'll get the December meal out of the way here. Get that out of the way. And we're talking about these other things. Where are we at here with some of the other stuff? I think that's pretty much it. Okay. All right. All right, now if you did the trade in the natural gas and selling it at 338, you want to risk $5 on that. So your stop would have to be at 43.44 on that. Whether it happens or not, we have to wait. So we have a request about another chart. So hold on one second. We got another chart to look at. That's NVIDIA. Must be a lot of people in that stock. Hold on one second. We'll get the daily up on this. This has come back really strong, folks. It's, oh man, I don't know what they're having over there in Denver. Let me refresh this and see if we can get rid of it out of the way. There we go. Now here's where we've been. Look at this, folks. Here's a perfect example. Look at this. We gapped up here, and look, this is a daily. 1, 2, 3, 4, 5 days in a row we've gapped right here. You just don't see that very often. You sometimes see it on bottoms, but to see it gap up like this, and if you look at this from a technical standpoint, I want to show you. We're going to cover this when we get back. This is really important. Well, it is for me anyway. Let's take a break here, and we'll be right back. Wow, 33.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Okay, folks, Larry Pesavento for Steve Rhodes. You'll notice this 5-day, this is called an island pattern, just like we had right here. This is a 3-day island. This is a 5-day island. they're very rare, folks. This means that's either distribution or accumulation. And of course, we had a bunch of gaps in here. It could easily be accumulation, but wherever direction it comes out of here is going to be it. Now, we've been here 1, 2, 3, 4, 5 days, just like we do here. If we close at the end of this, if we close down in here, we're at 333. Remember, all this happened within $3, folks. So there's something big is happening here, and it could easily go a lot higher, but this is also a spot where it could actually reverse from. If we go from the high that it made way back here, I think 153 was there. The 153 was the high, and your 786 comes in right about here at 139, so that would be some stiff resistance here. But if we stop here and gap down, this is going to be negative to it. But you don't know that because you have to wait and see if it closes in the lower end of the range. See, if it closes near the low of the day today, around 131, we're 133 right now. So if you close at 131, then I would be short, because then if it gaps below here, you've got that island, and boy, that's when you could get a big move. So the key level here is 131. Let's just put this beeper in to see if we get here today, and I would be willing to. The best way to do that, of course, would be to buy a put. That way you'd have limited risk exposure, because these things do go crazy, as we well know. Okay, so that's what we're paying attention to right now. Take a quick look at that gold market. See, it's still going up. Yeah, look like we might top here during my show today at around 11:30. We'll be watching it as we go through, but the key level here was right back here early this morning in that gold, because it pulled back right to the exact 382, and bang, and look at this big level consolidation here, folks. There's nothing bearish about this. So let's keep an eye on it. We'll see it in another hour, and may God bless. Thank you very much, folks.